Hello everyone, and welcome to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters across the franchised and independent dealer sectors.
Hello and welcome to this Motor Trade Radio weekday special. We're delighted to welcome back Chris Plumb, Head of Current Car Valuations at CAP HPI, joining us for this exclusive roundup of how trade values performed in August. By way of a quick recap, last month CAP HPI reported a dip of just 0.5% for July, very much in line with the average for the month, and it was forecasting a similar sized dip for August, where school holidays and good weather typically have a negative impact on dealer footfall and demand. Although, as we'll discover, this was not necessarily the case this August. We'll also take a closer look at some of the key trends around vehicle sectors and fuel types, especially EVs, which enjoyed an unusually strong month. And Chris will also share some of his thoughts on how trade values are likely to perform during the September plate change. So welcome back to the pod, Chris.
Hi, Phil and Curtis. Thanks for having me back.
You're welcome. So a bit of a holiday period now, isn't it? With you've got to leave a bit more work.
The amount of out of offices I think my team have set this month just alone has been impressive. But yeah, back for the second month. But it must mean the market's good. I leave the tricky conditions to Jeremy.
Yes.
Yeah, very good. So, I mean, welcome back. I mean, it's great to have you back on as always. And I think clearly, let's start off with walk us through the main headline for trade values at that 3-year 60 mile benchmark and how they compared, as Curtis said there, with previous August and into September movements.
Yeah, no problem. Well, August has turned out to be a fairly positive month for used car values and probably taken many of us by surprise just how strong the market's been. So we are reporting the strongest August to September movement since we've introduced CAP Live, if we exclude the two affected COVID years. So at the benchmark of 3 years, 60,000 miles, values moved just by 0.1% down, or a negligible £21 to be precise. And this is fairly strong when you say put it in the context of historical movements, because since CAP Live was introduced in 2012, the averaged August movement to September has been 0.7%, with the largest decline minus 2% in 2023, which is the start of that kind of big realignment we saw at the back end of in the last quarter of 2023, with the smallest being 0.2% down in 2017. So this 0.1% movement is generally really strong and showing just how much demand there is for used cars in the market at the moment.
And what's your take on? I mean, we talk about marginal movements so far this year. I mean, some people refer back to normal seasonality, but some of them are less than what we'd probably previously expect, as you said there, in terms of those pre-pandemic movements. What's your take on what's happening for the year to date of the trend so far?
Yeah, year to date, it feels like the market is performing more or less, well, probably slightly stronger than sort of seasonality, because every month so far this year, I think we highlighted this last month, apart from March when the movement that we made was in line with those seasonal averages, has been more positive than the historical averages. With actually a strengthening in the last 3 or 4 months as we've sort of come through the summer. Last year we called the summer, or it was dubbed the summer of stability, because over sort of June, July, and August, values moved by sort of values moved by 0.1% through that summer period. This year, it's the same. It's slightly worse, minus 1.2%. But we're seeing that similar pattern of strength continuing through the summer months, and that is generally down to that lack of demand in the market. One thing we found sort of quite fascinating to track. By about the 5th of the month, 5th of August, the average movement of 3 years 60 down in our Cap Live product with minus 0.5%, and it strengthened from that point onwards. And we've seen that in the last couple of months, the first half of the month being weaker than the second half, and there being a little bit of stability come mid-month, and then strength come towards the end. It was more prominent this month. I think that is because the supply is still restricted for those 3 to 5 year old vehicles.
And I mean, you do highlight that in the editorial, talking about those notable trends of that imbalance between supply and demand. Is it that 3 to 5 year market that you're referring to as sort of new? The nearly new market is obviously driven by some of the new car activity at the minute.
I think so. For the last couple of months, we've been saying how well balanced supply and demand has felt. But as we got, as I say, to about the 5th, halfway through August, I'd probably say that dynamic has changed, and the market for a long time has felt, or so far this year, has felt that there's been an imbalance. And that imbalance is there's more demand than there has been supply coming in. And it is around that 3 to 5 year old, even 3 to 6 year old vehicles we're hearing, where that true retail sort of primary stock profile, that's where the strength is. And it is still being affected by those 3 million cars that we lost during the COVID period, and then the subsequent supply chain shortages. We've seen or been reporting that many auctions have said through the month that there's been decline in stock, and that they see this continuing towards the back end of August this month, and even in the first couple of weeks of September. So we don't see much of a change in this at the moment, this imbalance.
And Chris, we'll look at fuel trends in a moment, because that's probably the big story this month. But before we do, were there any notable price movements by age points over the course of the month?
So not really. So the downward movements were negligible across all age profiles. So at 1 year, 10,000 miles, values dropped on average by 0.2% or circa £90. The 5 year, 80 mile profile saw a reduction of 0.3% or £30. The largest decrease was that of 10 years, 100,000 miles, or 0.8%, but in real terms, this was only £20. So a real consistent performance, really, across all those age and mileage points. And at that 10-year, 100,000 miles, that has been, I guess, where we're seeing some of the most negativity within the market, but that is being led by those vehicles with mechanical flags, high mileage, the stuff that's been a challenge for quite some time. But away from that, the market's been really stable.
And with such a minimal movement overall, were there any vehicle sectors that performed better than others?
So we've got MPVs were a standout performer for August to September, showing a positive movement across all age profiles, which potentially signaling a recovery for this sector, well, especially since the first half of the year, which was challenging. So at the 3 year point, MPVs were up 0.6% or £70, while sports cars led the way with the gains of 0.8% or £380. Among those mainstream sectors that we report on, so the likes of City Car initially dropped close to 1% in August, but recovered to finish at 0.3% down. Both super mini and lower medium segments moved from a negative to a positive trajectory as well, finishing at 0.2 and plus 0.2 and 0.3% respectively. And SUVs were the weakest mainstream performer at 0.5% down, though this was still better than the season expectations.
And I mean, Kurt said they were talking about the big topic, which is the fuel type now, and obviously this month is BEVs is probably the bit that you have highlighted in the editorial, and we've obviously seen a long period of underperformance, but there does seem to be a bit of a change now in what we're starting to see. Probably June going into July a little bit, July into August a little bit more, but actually more significantly now we're starting to see, as we move out of August into September, some significant shifts in that BEV marketplace.
Yeah, I think August has been really fascinating to track for BEVs. And we kind of saw, I think the last 2 months previous to this, we've seen the monthly movements that we've made haven't been as less of what we've seen previous this year, gave us sort of hope that things are starting to settle down. But again, August has probably taken us by a little bit by surprise. So after that sustained period, we're seeing that sustained period of underperformance. BEVs has showed a clear sign of stabilisation. If not, I'd probably say leaning on the side of positivity. So at the 3-year point, BEVs recorded a positive movement of 0.1% up. It's the first time this year values haven't declined, and it's the first reported increase since October last year. Within Cap Live, BEV values initially dropped again 0.4% at the start of August, but the past 2 weeks have shown quite a clear turnaround and positivity for BEVs, where they ended up at 0.1%. This coincided with a positive statement or sentiment that we're receiving both trade and retail markets.
And I mean, in terms of models standing out, and if we focus on probably those rises within months, what are the standout models that have sort of seen that positive buying behaviours from the market in terms of those battery electric vehicles?
Yeah, so probably the one standout model, and it's been like this for the last couple of months really. Again, this is at 3-year-old point. Is Mini Cooper Electric. That has led the way with an increase of 7.7%, or roughly £750. And over the last 3 months, it's risen close to 17%. But that's one model, again, that people highlighted at that 3-year-old point. Just look, exceptional value for money in trade and retail. You can trade it sort of sub £10,000, £9,000 3 months ago. I think people really got switched on to just how good value for money that vehicle is. The second strongest movement we made was the VW ID3, again at the 3-year point, up just over 5%, or £560, while the Vauxhall Vivaro Life was up 4.7%, £500. And of the two real volume models in the market at the moment, there's still lots of focus on Tesla as a brand in the new and used market, but the Model 3 and Model Y rose by, so the 3 was up 3.6%, or £550, while the Model Y was up 1.3%, or £265.
And I mean, you're looking at data on a regular basis, and you obviously you won't be able to enter any conversation meeting without BEVs being a topic of conversation. Would you say there's evidence now that the rate of the BEV decline, pure electric market decline, is starting to ease? I mean, is that as the volumes come in, as you noted before, the volumes coming into the marketplace, confidence in understanding how to retail these vehicles, do you think that heavy decline is now starting to slow?
I think it is for the time being, and we're seeing some really encouraging signs on that. If we just look at August numbers in isolation, so of all the models that we value at the 3-year-old point, 32% saw values increase in August, up significantly just from the 3% in July. A further 26 remained stable, with only 42%, even though it's still quite a high proportion, but when compared to July, where 67% went down, I think taking sort of headline from that, nearly 60% of BEVs in August either saw their values remain stable or have increased, which is a million miles away from where we were sort of 3-4 months ago.
And I mean, away from EVs, and there's a lot of talk about hybrids, plug-in hybrids, but what is happening in the other markets in terms of those fuel types now? What's happening with those hybrid models, either plug-in or not? And petrol and diesel, are we starting to see firming in that petrol and diesel market?
Yeah, so hybrid showed a flat performance with no average change. Petrol declined by a modest 0.1%, while both diesel and plug-in hybrids recorded a 0.2% drop. So BEVs led the way in terms of performance, but I think with that reduction of supply, or the restriction of supply into the market at the moment, retailers and buyers are having to look at all the fuel types at the moment to plug some of those gaps on the forecourts where they need to replenish stock. So we're seeing a real stable performance across all of those fuel types.
Well, we'll be back after this short break as we look at Cap HPI's August trade values a little bit further.
You're listening to all the chatter that matters on a special weekday episode of Motor Trade Radio, powered by Motors, the driving force behind multi-site advertising.
Now, Chris, each month you analyse retail activity by days to sell. Now, bearing in mind this imbalance you're talking about between supply and demand, how did those days to sell perform over the course of August compared with July?
Yeah, so the average retail days to sell did improve in August when compared to July, decreasing by 1 day, so from 40 to 39 days on average. When you break that down further, you can see a clear picture of who's performing or selling vehicles quicker. So you've got car supermarkets continue to lead the way at a remarkable 31 days. Franchise retailers improved from 34 to 33 days, while independents remained at 49 days with no improvement from July. But August has been quite an interesting month to track. The feedback we received from our retail partners was really mixed. It went from one extreme to another. One supermarket reported this, supermarket reported that it was their strongest August ever, or in recent years, while others described a steady performance, with the school holidays and the hot weather really impacting footfall. But I think the underlying sort of positive or message out there is it's been, for some it's been really good, for others it's been okay, but probably slightly better than July, and actually slightly better than this time last year. So I think generally the picture seems quite good out there.
And you've already touched on this, but I wonder if there's a bit more detail, because you also polled the views of the auction houses. What were they telling you about stock levels and trade demand for the month?
Yeah, I think from that auction survey, it showed remarkable positivity, which has been no surprise with the values going up, so much positivity in terms of that strongest movement that we've made from August to September. So 60% reported that stock had decreased compared to July, sort of fueling that sentiment that there's a reduction in stock in the market, with another 10% saying that it stayed the same. On the demand side, we saw a complete turnaround from July. 17% reported decline in demand, but in August, 0 respondents reported decreased demand. Half of the respondents experienced increased demand, while the other half said it remained steady. And on the conversion rates, Nat told the same story. 60% saw uplifts, with the remaining 40% holding steady. From August, and this has been a sort of a bit of a remarkable story out there, we're hearing conversion rates have climbed, mainly for some of those fleet and leasing sales, which, remember, do have over 50% now for some sales. BEV representation of the stock that's being put through, the conversion rate's raising to over 80% by month end, which is really strong for this time of year. Some vendors are telling us that it's been their strongest performance so far this year, being driven by that increase in demand. We're even been hearing of some group buyers going out, putting their towel on their sunbeds while they're on holiday, and then logging on and putting proxy bids on vehicles just to make sure they don't lose out on stock. It's been a real craze and demand for stock at the moment, which has sort of led to that positivity within our auction survey.
That's an interesting point, because I did notice within the editorial that you do actually refer to this. So this is dealers being on holiday and not actively switching off by the pool and putting bids in. So that would explain some of that activity.
Well, technology's come a long way in the last sort of 5 years. It's probably unheard of, people logging on and placing bids, but now it's kind of just become the norm. And has helped, keep the market going, even in some of what would be traditionally down periods from school holidays, etc. There's people still logging on and just making sure they're not missing out.
Yeah.
How times change, eh? How times change.
Exactly.
Yes. Well, talking of where we are today and where we're looking going forward, what is, I'll say, CAP HPI's view, and then we're not holding it to Chris Plumb, because then you can blame Jeremy and whatever else. But in terms of prices now, as we move into September, September's obviously clearly a big month with the plate change for the sector, both for the dealers, the vendors, and the consumer. I mean, what are your expectations now as we sort of move? We've had, you've talked about those months of stability, small movements through the headline figure. What's your view as we move into September? What are your expectations?
Yes, September probably goes against perceptions of the month, but September typically brings stability active for used car values, acting as a period. Sometimes the calm before the higher inventory volumes arrive later in the year. The historical data shows the average live value movement or values have increased in 7 out of the last 12 September periods since 2012. Vehicle numbers will increase as trade-ins and fleet returns come back to the market due to the new car activity play. But this extra supply isn't really likely to push values down significantly. We expect the same pattern as recent years, with average movement staying roughly flat. So we've seen anything between -1, -2 to a sort of 0.1 up, 0.2 up. Every month so far this year, with the movements that we've made roughly being more positive than those seasonal averages, would it surprise me if it ends up even ticking up a little bit? Maybe not, but roughly it's generally a flat market in September.
And looking a little bit further than that, in terms of Q4, what are you hearing in terms of stock supply coming back into the market? Are you expecting that we're going to sort of be in this similar supply and demand imbalance for the remainder of the year? Does that then drive value stability as we move through this fourth quarter? And are we going to sort of maybe, as the year sort of pans out, we're going to start to see this more activity in the new car market as manufacturers sort of chase market share at the year end?
I think so, and it seems to be the hot topic at the moment when speaking to our retailers, auctions. Everyone's saying, what's the volumes going to look like between now and the end of the year? And of course, there will be an increase. That always is in the last quarter. But for us, the market does feel more settled than it's probably been in the last 5 years. Like we previously mentioned, in the last quarter of 2023, values dropped sharply, 10.5%, well publicised and that was the average movement over those 3 months. But we're not expecting anything like that this year. Our forecasts suggest prices are following more typical seasonal patterns at the moment. So last year in Q4, values came down 4.2%. I think that's more in line with our expectations for this year. And that is mainly linked to, if you think our new car forecast, we're predicting 1.988 million cars, which would be roughly about a 2% increase from year on year over last year. And that kind of gives us sort of the indication that there's not going to be a massive rise in volumes. It's going to be similar to what we did see last year. And demand, you've got interest rates being cut, etc. Demand out there does seem to be quite good at the moment. So we expect it to follow that normal seasonality. BEVs will be interesting again to monitor, because I think we said last month, specifically for September, October and November last year, were positive months for BEVs. Be interesting to see if that does carry on. But early indications are it started a bit earlier this year, so expecting even BEVs to be fairly positive at the moment.
Yeah. It's going to be an interesting one, but hopefully our monthly catch-ups will keep us fairly close to it as the year runs out. I mean, as always, it's been a pleasure to have you on the podcast, Chris, giving the listeners a little bit more sort of context behind those headline figures. And as always, the editorial is available for anybody that wants to read that. It's available as of this morning on the cap-hpi.com website, or check out any of the editors' social feeds, particularly on LinkedIn. That's Chris, Jeremy, Rachel, and the others there at Cap HPI, and I'm sure they'll be sharing the editorial for the cars and the commercial vehicles, etc., through their channels. But also there's a webinar coming up in the next market webinar. I think it's Wednesday the 3rd of September that people can now sign up for and get a little bit more sort of insight into what's happening in the market, and a Q&A at the end.
Yeah, that's correct. So Wednesday the 3rd of September at 2 p.m. Anybody, if you haven't subscribed to it, please drop me an email. and I'll send you the link, or check out my LinkedIn page. There's a link on there for registration. Yeah, I'll be covering off in more detail what's happened in August and what we expect, but we'll have Matt Freeman from our consultancy team doing a bit of a deep delve into our retail data. Dion Hanlon will be looking at what's happened to the LCV market and what's coming, and Dylan will be covering probably all things future forecast, along with gas prices, electricity prices, all the other good stuff that Dylan covers off. So anyone, if you're not signed up, please get signed up to it.
Well, Chris, many thanks for joining us for that overview of how August performed. And we look forward to catching up with the team next month to see how September panned out. But that's all for this special weekday Motor Trade Radio podcast. Thank you very much for listening. We're back with all the big car retailing headlines this weekend. Until then, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to this special weekday Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. Philip and Curtis will be back with the week's big motor retailing headlines on Saturday. Live, on demand, wherever you are, on your podcast feed.